Hi there, welcome to Kneppy Invest and welcome to another stock of the day. A bit of a contrast to yesterday's stock of the day, Technology one of the highest quality companies on the ASX. Unfortunately, I could not say the same thing about today's stock of the day, Nufarm, ticker code NUF. In fact, I would say this is without doubt a low quality company. And unfortunately, also for this company, they released their half-year results today on May the 21st, and the market absolutely hated it. Share price down about 30%. So what I'm going to do in today's video is I'll go through Nufarm's results fairly briefly, or maybe not that briefly, and then what I'll do is, because I went through the financial metrics of Technology One yesterday in understanding the quality of that company, I'll do the same thing with Nufarm. But when I talk about the quality of this company, I can't attribute blame to the management. It's just that Nufarm is in a difficult sector. So this is an agricultural chemical company, and that's a tough thing to do. And that's probably the main reason why I would never ever consider agricultural companies as high quality companies, because it's a tough business. We're just talking about weather. That's one of the things that could affect the financial performance of this company that is complete out of control of management. Now, some of you might say, what about cloud seeding? Well, cloud seeding is slightly manipulating the weather. It's not controlling the weather. In fact, cloud seeding can only be used under the ideal conditions. You can't go to the desert and make it rain over all the deserts. That's not how cloud seeding works. You need ideal conditions for cloud seeding to work. In fact, if Nufarm or anyone could control the weather, they would be the richest people in the world by far. In fact, they would make Elon Musk look like a pauper because weather is really important. And if you could control the weather, wow, the things you could do. And I don't think it will ever happen in our lifetimes that anyone will get anywhere close to controlling the weather. Okay, so what I'm going to do in today's video, we'll go through the results, and then we'll have a look at the financial metrics. But if you're really lazy, or if you just have no time, sometimes to determine the quality of a company, you can just have a look at the chart. And I'll have a look at the long-term chart for this company, and then I'll also compare it to Technology One. And you'll see a stark difference between the two charts of the companies. And just by having a look at the chart, you can determine where a company fits on the quality spectrum. Okay, now first thing, before we have a look at the results, for those who don't know what Nufarm does, agricultural, chemical, they have two divisions. First division is crop protection. So we're talking about herbicides, insecticides, fungicides, maybe a few other things as well. The second division is seed technologies. So they do developed high-yielding seeds like canola, sunflower, and sorghum. But they've also developed the world's, they either developed or commercialized the world's first plant-based omega-3. So even though I might refer to it as fish oil, that's not technically true because it's not derived from fish. Anyway, when I researched this company about 8 years ago, I was actually quite bullish on Nufarm just because of their seed technologies and omega-3. Well, that bullishness has faded away quite quickly, and one of the main reasons is because of today. So hint, hint, one of the main reasons, in fact, the main reason why the share price of this company is down 30% is because of seed technologies, particularly because of omega-3. So let's have a quick look at the company's results. And what I might do is I'll just focus on the presentation because I'm lazy. And they do have a financial summary here. And this is good enough, I suppose. And then what I'll do after this, I'll go through the different divisions, which is just above the financial summary, which is really weird. They should probably start with the financial summary and then go to their different divisions. But revenue up 3%, underlying gross profit up 5%. That's a pretty good start. It's not a bad start. But then, because of different factors, underlying EBIT down. So underlying EBITDA is down 6%. Underlying EBIT down 15%. If I remember correctly, one of the reasons behind that decrease in EBITDA and EBIT is because of marketing, administration, and also a bit of a bump up in research and development. Now, increasing research and development could be beneficial for the long term, but not for this first half. Yeah, and more importantly, statutory net profit after tax down 39%. So revenue up, profit down by a fair bit, and we'll discuss why in a second. Okay, so now let's have a look at the different divisions, and we'll start off with, here it is, crop protection. So they broke crop protection down into different geographic regions. I really like when companies do that. So Australia Pacific, North America, and Europe, and really good performance in Australia Pacific and also Europe. In fact, I'd say Europe performance has been absolutely stunning in the last half year. Revenue up 17%, underlying EBITDA up 26%, and underlying EBIT up 96% in Europe. Fantastic results in Europe. So if this company just had operations in Europe, they would have hit the results out of the park. Even Australia Pacific, pretty good results. Revenue only up 1%, but underlying EBITDA and underlying EBIT up about 30%. A little bit of negativity when it comes to North America. All the numbers down a little bit. Revenue down 2%, underlying EBITDA down 1%, and underlying EBIT down 10%. So crop protection not doing that badly. In fact, doing quite positively, particularly in Europe and Australia and Pacific. Now let's have a look at Seed Technologies, the one division I was bullish on. Rolling my eyes right now. And straight away, we can see what has caused a bit of a slump in the company's performance. Revenue down 3%, EBITDA down 46%, EBIT down 71%, from 54.6 million to 15.9 million. In fact, I did briefly compare the EBIT of their crop protection and seed last year to this year. So last year, crop protection had EBIT of 90 million, around roughly 90 million, and Seed Technologies had EBIT of about 54.6 million. This year, crop protection has EBIT of 120 million, and Seed Technologies has an EBIT of 15.9 million. So even though Nufarm has seen a pretty good, nice increase in crop protection EBIT, it's been the significant drop in Seed Technologies EBIT that has seen this company underperform in the first half of this year. And the reason behind that has been omega-3. There's been a lot of weakness in this space, maybe an oversupply, that sort of thing. So if we go to their media release, they do have an outlook section. If the current weakness in fish oil pricing continues to hold, so I'm assuming that there's been oversupply of fish oil. So again, they're talking about fish oil, but it's a plant-based omega-3 that Nufarm do manufacture. They expect EBITDA from Seed Technologies for the second half to be circa 20 million below the prior year. Due to lower than anticipated fish oil prices, we no longer expect to achieve $100 million of omega-3 revenue in financial year 25. We are currently assessing options for managing omega-3 inventory. So one of the main reasons behind the bad performance of this company has been omega-3. And funny enough, I was actually quite bullish on this part of the business not that long ago, well, 8 years ago. The other thing to mention here is they're doing a review of the Seed Technologies, which is understandable because it has really underperformed in the past half year. But who knows? There could be a turnaround fairly quickly. They also mention here, and whenever I see any sort of review, one of the things that does pop up in my mind is they might sell off this part of the company, because if they only had crop protection, this would have been a good half year for the company. But they did mention here there is no certainty that this process would lead to a transaction. Okay, so they could do something else. It's up to them. That's why they're doing this review. So that is why the share price of Nufarm is down 30%, because of underperforming Seed Technologies sector. I think that's all I really want to talk about when it comes to results. The other thing I should mention here is, if you have a look at their financial statements, you'll notice that this company was highly operating cash flow negative, 459 million for the half year. I was thinking, whoa, what is going on here? But maybe there's a bit of seasonality, because last year they were highly operating cash flow negative. And in their presentation, I'm pretty sure it was in their presentation, they actually do discuss this. If I can find it, revenue bridge, working capital. Here it is. And there's a lot of seasonality when it comes to this company's cash flow. So it's on the bottom half of this chart here. half-year cash flow movements, $1 million, and you can see it go up and down, up and down. So the second half of this company's cash flow statement is going to be highly positive. So the cash flow will be highly positive. So last year, they were cash flow negative, operating cash flow negative by $207 million. In the second half of the year, they're operating cash flow positive by $680 million. So they do have to turn around the company a little bit to be operating cash flow positive for the whole year, because this was a bad half year. So same sort of thing happened in 2023. $559 million of operating cash flow negativeness and only $433 million positiveness in the second half. But the cash flow will turn around in the second half, and they actually do explain why in the commentary of this particular section. So if you do see that, just be aware that this company is seasonal, or their operating cash flow is seasonal. Okay, now on to FinChat. Why I would describe this company as low quality. Now, the first reason is simple enough. It's just a hard business, and it's agriculture. I would never describe an agricultural company as high quality, just like mining. So for that simple fact, I could never, ever describe Nufarm as a high quality company. But then you have a look at the metrics, and that sort of backs it up. Now, the first thing I look at is growth in revenue and earnings per share. Unfortunately, in FinChat, I might just increase this. No, I won't. They don't have any growth in revenue or earnings per share over the last 3 or 5 and 10 years, only the last 3 years. So you do have to turn to the financial numbers here. So revenue, here is revenue. Don't know why they don't have it. So revenue over the last 10 years has grown at 2.24% per year. So very slow growth in revenue. You see a massive dip in revenue in 2020, so we can ignore that one. So there is an increase, or has been an increase in revenue, but it's been slow. It's been mind-numbingly slow for their revenue growth. Now, if we go back to that overview, so not much growth in revenue. I'm assuming not much growth in earnings per share. The other thing I look at is margins. Gross margins 25%, operating margins 1.8%, so really low operating margins. I'd like that to be a little bit higher. Gross margins are okay, but really low operating margins. Return on equity, pretty low as well. In fact, the 5-year average return on equity is about 0.6%, and return on invested capital 2.2%. So that is also well below what I would expect for a high quality company. I won't mention the dividend yield. Doesn't have any dividend yield here. Anyway, sometimes I always look at, say, how gross profit margins or operating margins have increased or decreased through time. In fact, we'll turn attention to operating margins because they are fairly low. And typically they are just above positive, but there was 1 year where operating margins were negative, which is understandable. But operating margins have been as high as 10% in the past 10 years. Unfortunately, that was 2016. And they have been ranging between 0% and 10%. The only thing I'm going to look at is return on equity, because I'm assuming return on equity has never been high for this company. Also have a look at return on invested capital. So I'm just assuming that even though the 5-year average has been fairly low, that is a common theme for this company. So let's have a look. Yes. In fact, if you have a look at return on equity, negative some years, which means this company has been loss-making for quite a few years. In fact, in 2020, 2021, this company was highly loss-making. But even when they're profitable, return on equity typically is between, we'll say about 0% and 8%. The highest it has been is 7.3% in 2017. So this is signs of a low-quality company. Return on equity really low, return on invested capital really low, really meager growth in revenue. Nothing much to like about this company when you have a look at some of these financial metrics. Okay, now onto the chart. So first thing I'm going to show you is Technology One of the highest quality companies on the ASX. And we'll go to the weekly chart. Also put in here the 100-week moving average. And if you go back, we'll go back 20 years. You'll go back 20 years. Why not? So by the way, what I'll do also is if we go back to the overview of Nufarm and just have a look at their return. This is not total returns. This would be just share price return. So negative 11.5% over the last 5 years. If you have a look at the last 10 years, share price is down 9.1%. Now, if you include dividends, even if you include dividends, CAGR of 7.8%, negative 7.8% over the last 10 years. That's not the sort of return you want to see for any company in your portfolio over a 10-year period. Over the last 5 years, negative 10.1%. And over the last, we'll say last 20 years, total return of Nufarm has been negative 4.5% per year. Now, I'm assuming this company listed before that, but that's not the sort of returns you want over a 20-year period. So again, just by looking at the total return of this company over a long-term period, not a high-quality company. So let's have a look at the charts of both these companies. Now, technology, oh, by the way, should I do technology one as well? No, I won't. So technology one share price has gone from 50 cents to $38 over the last 20 years. Over the last 5 years, the share price of technology one has gone from $4 to $38.54. And just have a look at this chart. This is the chart of a high-quality company. Now, compare the chart to Nufarm. This is a chart of a low-quality company. So this does go back. Oh, it looks like they listed, 2009. So this only goes back 16 years, but this is not the chart of a high-quality company. In fact, the share price right now is lower than it was when it listed. That's not what you want to see over a 16-year period. And not only that, there is something interesting about this chart, however. So, oh, there we go. So there was a nice little support level for Nufarm at around about $2, and the share price today, look where it is. Oh no, it's 283. Wait there, I'm on the wrong. I'm on the wrong. Where is it? Where's my chart? It says it's $1.66 here. Something is wrong here. This says Nufarm is $1.66. Am I on the wrong? I might be on the wrong. I am on the wrong exchange. There we go. Okay, so this is better. So this goes back to when they listed. So that was the wrong exchange. I was wondering, the share price is completely different. So this goes back all the way to 1990s. So we just have a look at the last 20 years. And even if you have a look at the last 20 years, the share price is still lower, which makes sense. And the share price of Nufarm has dropped below $3. And $3 has been a nice support level for this company, and today has fallen through that level. So we're talking about the share price of Nufarm at historic lows. And when I say historic lows, the last time share price was this low was back in 2003. 2003, wow. So you could actually argue maybe there's some value in this company at these levels just because it's at a 20-year low. But that could be a bit of a trap. Okay, that's all I have for this particular look at Nufarm and why it's a stock of the day. Share price down 29.6%. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.